Hey guys, Tony Denaro here. Welcome back to the channel. Today I'm going to be talking with you about Hellbiz, a company that rents scooters and electric bikes in the United States and Italy. And if you are a trader like myself, there was a fantastic opportunity last week to make up to 500% gains trading this stock. But today we're going to take it a step further and talk to those of you that are still holding this stock about the upcoming dilution. Before we get into that, I just want to say to those of you who are content creators on YouTube, influencers on Twitter, or stock twits, if you're in and out of plays in a day, my videos are not aimed at you guys. You don't need this type of due diligence. You are doing the right thing, taking profits and moving on. Congratulations to all of you on the gains last week. But I think it's fair to say that even today, Saturday, January 28th, there are still people pushing this notion that Hellbiz is going to go next week to $1, $2, $10, what have you. It depends on who is pushing the content. And they are just looking at charts and ignoring all of the filings, the upcoming votes that are going to be happening with Hellbiz, and just the upcoming dilution in general. So we're going to spend a couple of minutes going through the type of DD that I do for those of you that are still holding it to help you understand what I think is going to be coming for Hellbiz. Let's get right into it. As I mentioned in the beginning of this video, and as you probably already know, if you are an investor in this company, Hellbiz is an ESG-friendly company that rents e-scooters, e-bikes, and e-mopeds. And they have been a growing company from 2020 up until 2022. But let's dig a little bit deeper. Hellbiz started trading in August of 2021 after a SPAC merger and subsequently ran up to just over $41 in very short order. But since then, it has just been beaten down until the closing Friday, January 27th at 28 cents, falling another 20% in after hours to 22 cents. Why did that happen? And more specifically, for those of you who just bought in the past couple days during the recent run-up that we see on the screen right now, should you keep on holding Hellbiz? What are the prospects of it going up versus down into next week and later this year? Let's look at some more details. There were three big press announcements from Hellbiz last week that really got this latest rally going. You can see the first one at the bottom of the screen. Hellbiz evaluates investigation into illegal trading of stock. That has been a big issue lately with a lot of CEOs of these small penny stock companies, and that got people's antennas up. That was your first indication to take a little bite of this stock. Then on January 23rd, another boom across the bow of the short sellers. Hellbiz hires share intel for due diligence and advancing in the battle against illegal short selling. That was really the beginning of when this thing started trading up. And then on January 24th, we had an announcement that Hellbiz had over 1,300 pre-orders, generating over 2.2 million in future sales. And this ticker was then off to the races. But why did it cap out where it did? And what is going to happen next? Now, just so you know where I'm coming from with Hellbiz, I play it as a momentum trade. I'm neither bullish nor bearish on it. I don't really care about the stock. I've been following it in my Discord and providing information to the members in the Discord since this run-up you see in the middle of the screen in August of 2022. I'll put one of my due diligence posts from the Discord right up here on the screen for you. Yes, we had people back in August saying it was going to run up to $10. I cautioned the folks in the Discord about the dilution that was sitting out there with convertible notes and warrants pegged at $3. And I said, let's get out before $3. It ended up capping in that particular run up at $2.44. So I think that was a pretty good call. On this more recent run up last week in the middle of January 2023, we also got in early on this Hellbiz play. I got out with half of my investment at 46 cents. I'll put the Discord post right up here. And then on the morning of the 24th, I woke up and realized that a SEC filing had been made after hours on the 23rd, and I got out the remainder of my investment in Hellbiz at a profit at 40 cents. Now let's talk about why I got out at those levels and why these SEC filings matter and why I want you to always pay attention to them or listen to a due diligence channel like myself if you're planning on holding these stocks more than overnight. I want to encourage you guys to become better investors, to get used to reading financial statements, the income statement, the balance sheet, the cash flow statement. especially if you're doing more than just day trading or swing trading overnight. If you're holding more than a couple days, you need to glance over to these and see what you're dealing with as far as this company, because people out on YouTube and Twitter are never going to give you the full picture. They might only be looking at the chart. And for those of you that are holding this stock more than a couple days or thinking about making it a long-term play, if you're listening to YouTubers or influencers who are neglecting to go through this kind of information for you, you don't know that you have a time bomb ticking over your head that is about to go off and ruin your ability to get out of this trade with a profit in your hands. And at the end of the day, that is what I care about, seeing you guys take a profit on every trade that you get into and be successful in the long run on every single trade that you make. You can see here on the income statement, total revenue has been flat for the last 4 quarters. And as far as the net income, they are losing a lot of money, $25 million in the last quarter. And the past 4 quarters have all been massive losses. Over on the balance sheet, it's even a scarier story with current assets at $14 million. 3.3 million of those in cash, but total current liabilities at $48 million. Guys, that's almost 4x liabilities than assets they have to pay them in the next 12 months. This is a serious problem. So what does that mean? What does a CEO do when they can't pay their bills? They don't have enough cash or assets to cover all the current liabilities. They need more capital. They need money, and they can either borrow that money or they can sell shares into the market, what we call dilution. And you can see that is exactly what the CEO of Hellbiz is doing. And he's not very good at putting out press releases when he does it. And he often is denying it on Twitter as well, which I don't find very agreeable. Since June, the outstanding shares on Hellbiz has risen from 34 million to the most recent 214 million shares. The dilution is coming in so fast, you can see up here in the right-hand corner that even the brokers can't keep up with it. They still have the free float listed at 149 million. They've been diluting so much to you in the last couple weeks that the float is 214 million shares, and it's not even updated on the brokers yet. It will be in the next few days or week. With this tool, not only can I see the dilution in real time as it happens, but I can also see the warrants at what exercise price those warrants could dilute our shares as common stockholders, the convertible notes, and even the equity line. Yes, you've seen the CEO talk about this equity line, and there was a filing just a couple days ago that they asked for a new equity line of $20 million. He's saying, don't worry about it. I promise I won't dilute this week. Why did he need this new equity line? Because he just diluted the October one, $13 million worth of shares into the float at pennies per share. That one just got depleted. Now he's about to launch a new $20 million dilution effort to continue to raise money for the company. Why is he doing that? I refer you back to the balance sheet. This company is desperate for cash, and the CEO can say that he is not going to dilute last week. That was kind of funny, but this new dilution is coming, and that is going to tend to act as a buffer to the top of the price, because as retail bids it up, the company is going to be selling shares and raising money so that they can pay their bills and continue to operate. Now, you might be asking, how do you find out about dilution when the CEO is denying it and they're not issuing press releases to you to tell you that it's coming out? Well, you can either pay for a premium service like I do for dilutiontracker.com, which is about $75 or $80 a month, or you can go for free to the SEC Edgar site and read all of these filings, the 8Ks, the 424Bs. There are a bunch of them here going back all the way. Go back and read them all the way at least to August or October of last year. All of the clues are right here. Same one with this S1 registration statement. All of these are covering either warnings from the exchange for things which you might not know about, like the fact that the company neglected to have an annual shareholders meeting and they're under risk of being delisted for that. Did you know about that? No, you didn't, because the CEO is not talking about that. Warnings for the stock being delisted for being under $1. You might know about that. Now we have an upcoming proxy statement that just got filed on the 27th for a reverse split, which is probably going to be 1 for 50 to cure that problem, he's going to need to beg the NASDAQ hearing committee for an extension on doing the annual shareholders meeting, a very sloppy way to run the company, to completely miss your annual shareholders meeting and your 10K filing. There are a lot of problems going on at this company besides just the dilution issues, but let's get back to those and talk about, besides all of the dilution that he's been doing, what is coming up on this proxy statement. Here is the proxy statement. I'm only going to talk about it at a very quick high level, but I just want to remind you there was that equity line January filing, which just happened, for $20 million worth of dilution at 22 cents a share. That's 90 million new shares right there. If you're wondering why the stock fell 20% in after hours, that is one bit, but the other bit is everything that is on this proxy vote. There is a reverse split proposal for the Class A and the Class B stock. I'm not as worried about the reverse split for causing the price to go down. It's the dilutive effects that are in the other proposals that contributed to the price going down. Now, if you don't know what the Class B stock is, that is stock that is owned by the CEO himself. He currently has 43% of the voting rights. I'm pretty sure I know how this upcoming proxy vote is going to go, if you know what I mean. If those reverse splits are approved, proposal number 1 for the Class A and the Class B stock, then we drop down to proposal number 2, the authorization of the amendment as required by and in accordance with the NASDAQ Rule 5635C. That just basically says that, well, in proposal number 1, the board gets to decide the ratio, the split 1 to 10, 1 to 25, 1 to 50 for Class A and Class B. And they may weight the split ratio between Class A stock and Class B differently. They don't have to be 1 for 50. Maybe the CEO wants to retain control of the voting rights by splitting his shares less. If you vote for proposal 2, you are giving the board authorization to split them as they see fit, even if it does not benefit you as the common stockholders of Class A shares. Proposal number 3, the authorization to convert Series A preferred stock into shares of Class A common stock. The preferred stock was issued to previous holders of Wheels, an acquisition that Hellbiz did. There's about 6.75 million shares, and they want to convert those into Class A common stock, which you also could consider more dilution to your Class A common stock. It is a 1 for 0.8 conversion, so you'd be looking at about 5.3 million shares after the conversion added to the Class A common stock. The reason they want you to approve this is that those preferred shares get a 7.5% dividend. If you vote against this, then the company will have to pay that dividend at the end of March. That is up to you to decide if you want to have the company outlay cash, which they don't really have, to pay a dividend at the end of March, or if you want to let them convert the preferred shares into common stock. Proposal number 4, the conversion of up to $5 million of current liabilities into shares of Class A common stock. More dilution. Remember that balance sheet problem I talked about? All those current liabilities that they are struggling to pay off and not having enough cash to do it? Well, what is one way to do that? Just have the stockholders approve converting that debt into common stock. If you approve proposal 4 to help the company get that $5 million off the balance sheet, they don't have to pay that debt back anymore, which I'm sure they would appreciate. You are agreeing to increase the float by about 23 million shares of additional dilution, and those shares will be handed over to the debt holder in the form of equity or common stock. It is a tough job, no doubt, to be a CEO and come up with creative financing to clean up the balance sheet and get enough cash in the books to take care of all the bills. I don't envy the man his job. The best thing that the CEO could do to get the shorts off his back is maybe not investigate FTDs and naked shorts, but fix the fundamentals, clean up that balance sheet, get some new cash into the company, expand the company into new lucrative markets. I know they're already working on closing down areas that were not profitable. Kudos to him for doing that. They also did some staff layoffs to cut the cost. He's doing the right steps. And I'm not saying this company doesn't have a shot. I just think that if you are holding this company for the long term and expecting that in the next couple weeks, the stock price is going to shoot up, you might be being misinformed by folks on YouTube who aren't looking at the financials and have not bothered to understand this massive, massive dilution that is about to hit the Class A common stockholders. I submit that to you, my due diligence. for your review. Feel free to add your comments or questions down below. I'm happy to help you. That is what I am here for. I want to thank you for watching. Join me on a live stream during the day or in the evenings. We have some more relaxed live streams where we have fun and answer your questions. I hope to see you on one of those. If you got value out of this, please like it, share the video. My name is Tony Denaro. Don't forget to buy and hold that subscribe button, and I will see you on the next video.
So you are